Ever wondered how the tech giants, NVDA and TSM, would fare in a boxing match? Well, we don't have boxing gloves, but we do have some interesting numbers. Now picture this. Two tech nerds, let's call them Bob and Alice. Bob, a die-hard NVDA fan, and Alice swearing by every chip TSM manufactures. One day, they decide to settle their debate. Not with a game of chess or a duel of coding speed, oh no. They decide to do it the old-fashioned way, with a potato sack race. Yes, you heard it right, a potato sack race. You can imagine the spectacle it was, with Bob tripping over every second step and Alice almost making it to the finish line only to be chased by a curious squirrel. That's how heated the rivalry can get when we talk about these tech behemoths. And that's exactly what we're going to explore today. We'll be comparing NVDA and TSM, two giants that have shaped our digital world. So, buckle up folks, it's time to dive into the world of tech giants, NVDA and TSM. History isn't just about kings and wars, it's also about microchips and processors. Now, let's dive into the historical growth of two tech giants, NVDA and TSM. NVDA, or NVIDIA as many know it, started its journey in the late 90s, initially focusing on providing high-end graphics cards for gamers. Fast forward to the mid-2000s, and NVDA began to diversify its portfolio. The company ventured into the realm of artificial intelligence and autonomous vehicles, leveraging the power of its GPUs beyond gaming. This strategic pivot was a game-changer, driving the company's exponential growth in the following years. On the other hand, we have TSM, short for Taiwan Semiconductor Manufacturing Company. Established in the late 80s, TSM was the first dedicated semiconductor foundry in the world. The company's growth was steady and robust, underpinned by its unique business model of producing chips for other tech companies. By the dawn of the new millennium, TSM had established itself as a dominant player in the semiconductor industry. There's a key difference we need to highlight in the growth trajectory of these two tech titans. While NVIDIA's growth was fueled by its innovation and diversification, TSM's growth was driven by its ability to produce high-quality chips cost-effectively for a wide range of customers. Both companies have had their fair share of ups and downs, but they've managed to navigate these challenges and come out stronger on the other side. NVIDIA's push into AI and crypto mining has seen its stock price skyrocket, while TSM's persistent focus on improving its manufacturing processes has kept it at the forefront of the semiconductor industry. Despite their different paths, both companies have shown remarkable resilience and adaptability, which have been key to their historical growth. They've not only survived, but thrived in the ever-evolving tech landscape, continuously pushing the boundaries of what's possible in their respective domains. So that's how our tech giants have grown over the years, but what about right now? Let's move on to the next chapter to examine their current market caps and see how they stack up against each other today. When it comes to market cap, size does matter. And in the tech industry, NVDA and TSM are two giants that certainly pack a punch. At present, NVDA boasts a market cap that floats around the $300 billion mark. Now that's a hefty figure, but it's a testament to NVDA's strong position in the tech world. Known for their cutting-edge graphics cards, which are increasingly being used in crypto and AI applications, NVDA's vast market cap reflects their significant influence. On the other hand, we have TSM, or Taiwan Semiconductor Manufacturing Company, the world's most valuable semiconductor company. TSM's market cap is an even more staggering figure, hovering around the $500 billion mark. This titan of the industry produces the majority of the world's semiconductors, a testament to their dominant role in this global market. However, as we all know, the tech industry is as dynamic as it gets. It's a roller coaster ride of innovation, competition, and market shifts. Both NVDA and TSM have their strengths and weaknesses, and their market caps are a reflection of their current standing. But remember, market cap is just one piece of the puzzle. It's an important metric, no doubt, but it's not the be-all and end-all. So, what does this all mean? Well, it's a clear indication that both NVDA and TSM are key players in the tech industry. Their substantial market caps are a testament to their prowess and position, but as we delve deeper into their finances, we'll see that there's much more to these companies than their size. So, while NVDA and TSM are certainly big fish in a big pond, we have to look beyond size. After all, in the world of investing, it's not just about how big you are, but also how well you swim. Size is impressive, But what about the money rolling in? Let's dive deeper and explore the income, free cash flow, and profit of these tech behemoths in the next segment. Let's talk about the green. And I don't mean the environment. When it comes to the financial health of a company, three key figures stand out: income, free cash flow, and profit. Let's dive in and explore how NVDA and TSM stack up in these areas. First up, income. It's like the heartbeat of a company, pulsing in with every sale and service provided. NVDA, known for their cutting-edge graphics cards, has seen a steady increase in income over the past few years. The demand for their products in the realms of crypto mining and artificial intelligence applications has been a major driving force behind this growth. On the other side of the Pacific, TSM, or Taiwan Semiconductor Manufacturing Company, is no slouch either. As the world's largest dedicated independent semiconductor foundry, their income has also been on an upward trend thanks to the ever-growing demand for electronics worldwide. Next, we have free cash flow. Think of it as the lifeblood of a company. It's the cash left over after a company pays for its operating expenses and capital expenditures. It's what allows a company to pursue new business opportunities, pay dividends, and reduce debt. Both NVDA and TSM have had healthy free cash flows, indicating their ability to generate enough liquidity to remain flexible and responsive to market changes. Last but certainly not least, we have profit, the holy grail of any business. It's the ultimate indicator of a company's financial health and success. NVDA's profits have seen a significant boost thanks to the skyrocketing demand for GPUs in the crypto and AI sectors. TSM, on the other hand, has also shown robust profits, driven by their near-monopoly status in the semiconductor industry. However, it's not all sunshine and rainbows. Both companies face their own set of challenges. NVDA's heavy reliance on the unpredictable crypto market could impact its future earnings. TSM, meanwhile, operates in a region fraught with geopolitical tensions which could potentially disrupt their operations. So after comparing the income, free cash flow, and profit of NVDA and TSM, it's clear that both companies are in a strong financial position. They've both demonstrated the ability to generate steady income, maintain a healthy cash flow, and turn a substantial profit. But remember, no company operates in a vacuum. External factors can and do come into play. Impressive numbers, right? But what about the debts? Debt. The nightmare that even tech giants can't escape. It's the double-edged sword of business. On one hand, it's a tool that can fuel growth and expansion. On the other, it's a burden that can weigh down a company's financial health. Let's talk NVDA first. With a debt-to-equity ratio that's relatively low, it's clear that NVDA has a conservative approach to debt. They've been able to maintain a strong balance sheet while still investing in growth and development. It's a tightrope walk, but one they've performed admirably. Now let's turn our attention to TSM. They've also got a handle on their debt, but their approach is slightly different. TSM has a slightly higher debt-to-equity ratio compared to NVDA, indicative of their aggressive growth strategy. They've leveraged their debt to finance massive expansion projects, and so far, it's been paying off. Both companies, though, are not just playing it safe. They're using their debt strategically, investing in areas that will secure their future in the tech industry. It's a delicate balance, but it's one that both companies have so far managed to maintain. But remember, debt management is just one aspect of a company's financial health. It's important to understand how debt plays into the larger picture of a company's financials and growth strategy. Now, let's take a look into the future. Scene script. Grab your crystal balls, we're about to predict the future. When it comes to the potential growth trajectory of both NVIDIA and Taiwan Semiconductor Manufacturing Company, or TSM, there's a lot to consider. Let's start with NVIDIA. They've been on quite the roll recently, with their graphics cards increasingly being used in crypto and AI applications. This is a market that's only going to get bigger in the coming years. NVIDIA's strategic positioning in these burgeoning sectors suggests a promising future. Now let's shift our focus to TSM. As the world's largest dedicated independent pure-play semiconductor foundry, TSM plays a pivotal role in the global tech supply chain. Their growth potential is tied to the increasing demand for semiconductors, especially as we move towards a more digital and connected world. However, TSM's growth potential is not without its challenges. The geopolitical situation in Taiwan is a significant factor to consider. Any potential conflict could disrupt TSM's operations and have serious implications for the global tech industry. However, it's important to remember that in the world of business, risk and opportunity often go hand in hand. On the other hand, NVIDIA operates primarily in stable political environments, which could be seen as a competitive advantage. However, they're not immune to challenges. For instance, the increasing scrutiny on crypto mining and its environmental impact could pose a threat to the demand for their graphics cards. But let's not end on a gloomy note. Both companies have shown remarkable resilience in the face of challenges and have a proven track record of innovation. They both have the potential for significant growth given the increasing importance of technology in our daily lives. So there you have it. A glimpse into the potential future of these two tech giants. Their trajectories are influenced by a variety of factors, some within their control, others not so much. But one thing is for sure, both NVIDIA and TSM are not going anywhere anytime soon. So who's the winner in this tech giant boxing match? Well, that's for you to decide. We've had quite a journey, haven't we? We've journeyed through the historical growth of both NVDA and TSM, exploring the subtle nuances and broad strokes that have shaped their trajectories. We saw how NVDA's roots in graphics cards have given it a unique edge in the burgeoning fields of crypto and artificial intelligence. At the same time, TSM's dominance in the semiconductor industry has not gone unnoticed, despite the looming cloud of geopolitical tensions in Taiwan. We then moved on to the current market caps. Taking a look at the sheer scale of these tech giants, it's clear that their financial muscles are not to be underestimated. However, as we've seen, the financial landscape is not just about size, but also about how well you manage your resources. This brought us to the income, free cash flow, and profit of both companies. Here we found that both companies have been able to generate impressive results, although their approaches have been markedly different. The topic of debt allowed us to delve into the financial health of NVDA and TSM. It's always important to remember that debt isn't necessarily a bad thing, as long as it's managed well, and both of these companies have shown their financial acumen in this regard. Lastly, we explored the potential growth trajectory for both companies. Here we saw how NVDA's foray into crypto and AI could propel it to new heights, while TSM's position in the semiconductor industry could see it continue to dominate, as long as geopolitical tensions don't interfere. In conclusion, it's clear that both NVDA and TSM are formidable players in the tech industry. They each have their strengths and weaknesses, and their future success will depend on how well they leverage their strengths and mitigate their weaknesses. As with any investment, it's essential to do your own research and consider the broader context. And remember, the tech world is always changing, and today's underdog could be tomorrow's champion. Well, that's all, folks. We've journeyed together through the historical growth, market caps, income, free cash flow, profit, debt, and potential growth trajectories of NVDA and TSM. We've also touched on the geopolitical situation in Taiwan and its potential impact on these tech giants. If you found this information useful and enjoyed the content, why not show some love? A simple click on that like button goes a long way in supporting this channel. And hey, if you want to stick around for more deep dives into the tech world, don't hesitate to hit the subscribe button. I'm here, just trying to grow a new channel, and your support means the world to me. I can't express enough how much I appreciate you spending your time with me today. Remember to hit that like button if you enjoyed the video and subscribe for more tech insights. I'm just a growing channel and I greatly appreciate your time. Until next time, keep exploring the tech world.